America's Commercial Real Estate Show is brought to you by Bull Realty. When your business requires proven performance, visit bullrealty.com. And Arnold Golden Gregory, a law firm that makes a difference. Visit agg.com. And Cone Resnick, providing forward-thinking advice to help navigate business and financial issues. Visit coneresnick.com. And by France Media, providing exposure to the world of commercial real estate. Visit francemediainc.com. Welcome to America's Commercial Real Estate Show. Thanks for joining us to lead, learn, and laugh. Learn market knowledge and best practices to lead your company's success. And that's whatever type of company you work with. And laugh, I think we have to have some fun along the way. Well, hello, I'm Michael Bull, your host to the world of commercial real estate. Remember, if you have any questions or comments related to this show or about any commercial real estate endeavors, you're invited to give us a call. Our phone number is 800-408-SHOW. Our email is info@creshow.com, or you can reach us through any of your favorite social media sites. You can find them all at commercialrealestateshow.com. Well, today we're going to look at the retail industry and retail real estate. You know, retail has been negatively affected by the increase in online sales, and the sector was hit very hard in the recession. You know, we've all seen plenty of distressed retail properties, or most of us have. But retail spending has been strong considering the economy. There have been plenty of malls, grocery-anchored properties, and other properties performing very well. Well, today we'll look at the retail sector. We'll cover occupancy trends, sales volume, and cap rates. We'll also share some investment opportunities. Plus, we'll share active buyers that are in the market, and we'll look at what's working for market participants in the sector.
Santa Claus is coming to town.
And, of course, Santa Claus is coming to town. So we'll look at holiday sales expectations and market predictions for 2013. Please welcome my first guest, Dan Fasulo, Managing Director, Real Capital Analytics. Real Capital Analytics is a global research and consulting firm. Since 2000, their proprietary research has focused exclusively on the investment market for commercial real estate. In addition to collecting transactional information for property sales and financing, they also analyze and interpret the data, providing valuable insight on commercial real estate investment. Dan Fasulo, welcome back to the Commercial Real Estate Show.
Thanks for having me, Michael.
Well, aren't you glad that Santa could join us, right?
Yeah.
Well, Dan, what type of sales volume did you see in the third quarter and year-to-date for U.S. retail properties?
Yeah, well, we did about $9 billion worth of retail sales in the U.S. That's properties changing hands in the third quarter. That's up slightly from the third quarter of last year. Year to date, we've done just under $35 billion worth of sales, which puts us up about 5% year over year. So like some of the other property sectors, we've hit somewhat of a plateau. Actually, retail would actually be doing a little better on a year-over-year basis if it wasn't for some of those big portfolio transactions we saw in 2011. If you remember, we had the mega Blackstone Central Properties deal. So all in all, property sales are holding up. It's fair to say we might have lost a little momentum, but things are looking pretty good.
Are we at, let's say, a normal sales volume for retail investment real estate? I mean, if we go back to 06 and 07, was that a little high? I mean, are we at normal levels?
Yeah, I mean, we could have a whole conversation on what normal is, right, and how to define that.
The new normal.
Yeah, we're basically back to 2004 type sales level, which, if my memory serves me right, was kind of a healthy year. It was a normalized pace in my mind. We're still way off kind of peak levels in 2007 where we were doing, 25 billion worth of retail sales a year. But that period was dominated by, the massive portfolio transactions and obviously fueled by freely available debt, especially in the CMBS space. So we're running about half of those levels right now, and I don't think we can get back to that level unless we see financing loosen up even more, especially CMBS, which has been improving lately, by the way.
Yeah, so financing is more readily available now. Is CMBS making a comeback?
It certainly is. It's amazing how resilient that sector has been. Over the last couple of months, we've seen spreads come way in, making mortgage rates more attractive than ever for buyers and owners looking to recapitalize. To the point where the CMBS lenders are very competitive again, even on some of the better assets in the market. Which, if you remember, it was really the insurance companies that were dominating the Class A space.
Mm-hmm. Okay. Well, so what do you expect for fourth quarter? Are these drop in the rates going to help, and CMBS coming back? You'd expect more activity in the fourth quarter. I mean, also you think that with the tax increases that we expect to see, that some of these folks would want to close this year.
Yeah, I think there's going to be a flurry of closings by year end for a variety of reasons. One of the reasons is those tax issues that are certainly on the table. Another reason in my mind is, many of the banks that are sitting with some of these troubled assets or REO properties are going to wind up unloading them before the year end. So I'm expecting a solid fourth quarter. I think we'll do, easily. I think we'll do $10 billion worth of property sales, maybe even 12.
Okay. And what do you expect to see related to the distressed market for next year?
Yeah, I mean, we had discussed it on previous calls, but I think we're moving into the later innings of the distress cycle. We're definitely seeing more retail properties leave distress than are being added to distress. We have about, by our math, in this cycle, we've tracked about $65 billion worth of distressed retail properties. We think about 60% of those have been worked out, either sold to a healthy third party or restructured in some manner. And where we see the remaining distress, it's really sitting with the CMBS lenders. Mm-hmm. Of the kind of $26 billion worth of properties still in distress, about 16 or 17 billion of that is with the CMBS lenders.
Yeah, so there's still some more to work through. And who are some of the active buyers and some of the larger transactions you've seen in the third quarter, Dan?
Yeah, we've definitely seen the equity funds return to the space. Making somewhat macro bets on things like malls and major portfolios. We talked about Blackstone before. Starwood has been a significant buyer of malls around the country. We've definitely seen the non-traded REITs become very active in the sector. They've been able to raise a significant amount of money, and they are certainly putting that out quickly. And then, amazingly, we've seen a whole host of, foreign investors, even some of the major institutions, make big bets on urban retail. I was just reading this morning that Invesco is making a big bet on a prime corner of Times Square, Manhattan, at a astronomical price.
Nice. Well, what do you see for cap rates? Are these buyers driving down cap rates further, and what do you see for various retail property types?
Yeah, I think, retail was a little late as far as witnessing the cap rate compression that the other sectors, like the office or the CBD office and the apartment sector, witnessed maybe 2.5 years ago. So if you believe it, we've definitely seen the most amount of cap rate compression for retail properties out of all the sectors over the past 12 months. But it might be more to do that, retail has been a little late to the party. That said, cap rates have gotten awfully low for the top quality product again. and investors are starting to push back. So I can definitely see a situation where, cap rates start to level off, and the one thing that's helping sellers right now is mortgage rates are falling, which is, so cap rates are not really ticking up in our data yet. It's probably helped a little bit by the lower mortgage rate environment.
I see. Yeah, that certainly helps. You're getting a better spread there. Well, help us with this, Dan. I mean, a lot of the business people I've talked to prior to the election expected more confidence if Romney won. Now that Obama is our leader again for 4 more years, how do you think that might affect real estate market and retail in particular moving forward?
Yeah. Well, at least it's one uncertainty we could kind of cross off our list.
We know who's in, right? Yeah.
At least we know who's president. I mean, I worry to an extent about the CMBS space, which is a major source of capital for all types of retail properties throughout the country, small and large. And I worry about a Washington, D.C. that gets too aggressive with the regulations and winds up squeezing that sector to the point where they can't really provide the capital that's needed.
Okay. Well, we know what to look out for. Well, Dan, thanks for joining us today.
My pleasure.
Well, after a quick break, we'll talk to ICSC about the latest on retailers and retail sales. I'm Michael Bull. This is America's Commercial Real Estate Show. We'll be right back.